What's going on, guys? So, heading towards September 17th rate decision, we just had US PPI data that just came out and it was higher than expected. But CPI that was earlier this week came out a bit mixed, but the markets is still trying to force that rate cut. As we could just see right now, before the PPI, this was at 98%. So with this print coming out higher, right, this is why it dropped to 94.5. And most likely, we'll see what happens like throughout the rest of the day. We could see this continue, right? But to me, it feels like the markets is wanting to force this actual rate cut because I feel like they're just trying to listen to the Trump administration, right? Trump wants rate cuts. They're trying to blame Powell aggressively. But let me just show you guys what happened with CPI, right? Because when we had that CPI print, like you could see that equities did push higher, but then it recovered to move, right? So the CPI, what it did push the expectations of a cut right away. Markets was anticipating that because of NFP data, right? So even though that the CPI didn't really give us an edge, NFP weaker growth usually is a good signal for the markets to expect the feds to do something about it, right? Because recessionary fears is not what anybody wants. But the longer they keep rates where they keep rates high at these high levels, it's like at 4%, right? Above 4%. It could put stress into the economy. And this is what Trump is trying to use as an excuse to force Jerome Powell right now to cut rates. But Powell concerns is inflation, right? So this is why, focusing on the headlines from Fed speakers and then paying attention to the White House, right? Because the feds are saying inflation is what's causing short-term spikes in inflation. But the problem is short term. So if we're not expecting long-term inflation, that's probably going to keep him the pause rates. I expect them to pause rates for this year, my opinion. But it seems like the markets do want to force a cut to happen. And my reason is because if we look at the markets, right? So I'll show you guys what equities did so far. So NASDAQ is pushing lower, which is a good sign if you guys are trading equities after this PPI print, right? Because higher inflation, it is bad for the stock market. So this is why we had that break of support and we can see price is actually pushing lower. So we took advantage of this over the live call, so these are the opportunities we look for every day. So hopefully, majority of the guys took advantage of these sells. But it was a really good move on the live call, which is easy. It was easy. But now the hardest part is I want to see downside in equities continue because this is a good sign of stagflation, right? Weaker growth, higher inflation. Stagflation, definitely bad for the stock markets. But if the markets is not anticipating a pause for September, right? And if they still anticipate a cut, this could obviously start leading to better buys because there's nothing really that's happening with the US economy that is making me feel that we should still be anticipating like growth concerns or anything that should signal that we should be long-term sellers in equities. So this is why if we just look at the higher time frames, right? If you look at NASDAQ, we just been making higher highs and higher highs. With the expectations of a cut, it's already been playing out. But every time we had a big drastic move to the downside, it was really a reason behind it. We haven't had that reason yet. We're not seeing the escalations on tariffs anymore. We're not seeing the uncertainties with geopolitical tensions like wars. Tomorrow, we do have Russia, Ukraine. The U.S. and Putin, right? They're going to meet together to try to stop this war. But I don't think the markets is going to care about that. I feel like the markets it's already desensitized to what's going on with Russia, Ukraine. It's been happening for so long. I don't think the market's actually going to care unless the U.S. gets involved, right? Then I would say that we would have some opportunities that we could look to take advantage of, okay? But this is good to just give you guys an update real quick, just so that hopefully right now as of today, if you're watching this video, we're seeing weakness in equities because of stronger PPI. And then we're seeing dollar push up higher because this is inflationary. So we see that the yield spike higher, that strengthens dollar. USD JPY was the pair that I took advantage of. So just be cautious, right? Because the only way I could see that if the markets actually go against this, we're going to see the dollar break support. We're going to see equities recover. All right, guys. So just trade safely moving forward. Just remember that I like this direction moving forward now. Stronger dollar, weaker equities, because this shows higher inflation. But it just depends on if the markets is going to take this seriously or not. All right, guys. So trade safely and hit me up if you guys have any questions.